Some of the world's biggest names in business and the economy have gathered in the alpine town of Davos in Switzerland for the World Economic Forum. Here are some of the highlights from day two, which includes updates from the International Monetary Fund, mining giant BHP, and the Vice Premier of China. Day two of the World Economic Forum in Davos kicked off with the Director General of the International Monetary Fund saying economic growth should improve in the second half of this year.
It is true in our economic projections, we expect growth to further decelerate this year. But since in the beginning of the year we do seek some good news, here it is for you. We also expect in 2023 growth to bottom out. In other words, to start a process in which we go up rather than down.
The Australian stock market has rallied to a 9-month high in January, lifted by commodity prices. The iron ore price is at a 6-month high, and oil prices are at their highest point since November. The Foreign Minister of Saudi Arabia said his country was committed to oil price stability.
So on energy, energy security is absolutely key. And here what we feel in the Kingdom is that stability is absolutely the key to that energy security. So one of what we believe the successes of, for instance, OPEC and OPEC Plus has been, it has been able to deliver a relatively stable oil price, one that is predictable by both consumers and producers. Some other energy sources have faced significant challenges in that regard, significant rises, and we continue to be committed to that.
The head of a major American bank told Reuters on the sidelines of Davos that while it was expecting a recession in the United States this year, consumer spending was still strong.
And so it's solid, and that consumer spending, it goes back to the question of why the U.S. is in pretty good shape. It's a consumer-led consumption economy. It's a relatively closed economy. The consumers are spending, their wages are growing, and frankly, there's still a lot of stimulus in accounts, and there's more. Social Security payments are going up at a high rate, things like that are going to add more fuel that they can use to spend.
BHP Chief Executive Mike Henry appeared on a clean energy panel where he said demand for future-facing commodities like copper and cobalt would increase significantly over the coming years. The challenge is meeting that demand.
Not only is the world going to need a lot more copper, a lot more nickel, lithium, cobalt, and so on in the coming years, if we're to successfully navigate the energy transition, we're starting from the base of needing to offset a declining production base already, because current resources over time, grade declines in current mines. You have to invest capital just to overcome that, let alone increase supply. And the supply is going to be coming from mines that are harder to find, oftentimes smaller and lower grade. So the amount of mining activity that needs to happen is not just, so if we look at copper, we're going to need 2 times as much copper over the next 30 years as the past 30, 4 times as much nickel, 2 times as much steel, and therefore steel inputs. But the amount of mining activity is going to be even greater than that. And so coming back to your point around needing to ensure that this is done sustainably, if we're not careful in addressing the challenge of the energy transition, we're going to create unintended negative impacts on water, on biodiversity, on local communities and so on.
And the Vice Premier at one of BHP's biggest customers, China, told the forum its economic growth was expected to get back on track in 2023.
If we work hard enough, we are confident that in 2023, China's growth will most likely return to its normal trend, and the Chinese economy will see a significant improvement.